Hey guys, in today's video we're talking about traditional long-term care insurance. So in this video we're going to be covering what long-term care insurance is, how it works, how do you pay for it, what are the pros and cons to using it. If you'd like to receive more information on long-term care in general and the pros and cons of all the different strategies, in the description below I have a long-term care guide available for you guys, free to download. So long-term care insurance works pretty much just like your home insurance or even car insurance. So you're going to pay a premium every single month to the insurance company. In the event that you need a claim, you'll file it and then they'll pay the benefits that they guarantee to you. In the event that you don't need it or pass away before then there is no payment out. All the money put into the policy is now gone. So it's what they call a use it or lose it type of plan. These long-term care insurance plans came out a while back, and then when they first came out, they actually underpriced what they thought the cost of the insurance would be. So in response to that, they had to go back and raise premiums for their clients. So these policies do tend to have the risk of premiums going up in the future. Now the premium hikes can be pretty substantial. In fact, some policies that were issued only 10 years ago actually just saw a 70% increase in premiums. So imagine that, getting a letter from that company one day and seeing that your premium is going to be going up 70% over the next couple of years. So it is a real risk, and it is still happening today. So it's something to consider before purchasing one of these type of plans. Now the good part about these plans is they are relatively cheap. In fact, they're probably one of the cheaper long-term care insurance policies to find out there. They do, or I guess I should say can, have long-term care inflation adjustments to them. So the benefit you purchase could go up with inflation if you purchase an inflation rider. Not all of them have it, it's not required, but it is an add-on that is available. And another unique thing with these policies is a lot of them will qualify for the long-term care protection program in many states. If you want to learn more about what a state partnership program is, then check out this video up here. Essentially what it does is it helps you to protect some of your assets. For example, if you purchase a long-term care insurance policy with, say, benefits of $300,000 and that policy pays out all $300,000, but you're still alive and needing care, now you have to start spending down your own personal money. You're going to spend it down up until you have only $300,000 left. And then you can switch on and get onto Medicaid. So Medicaid pretty much makes you spend down all of your assets. You pretty much have nothing left in the bank. So the partnership programs, it allows you to keep more of your assets and still qualify for Medicaid. So whatever benefits that get paid out, you can keep that exact amount. So if $300,000 in benefits get paid out, you keep $300,000 of assets. If only $100,000 pays out, you keep $100,000 assets. That's the benefit of the partnership program. One other benefit with long-term care insurance is that the premiums are tax deductible. So if you're someone that itemizes your taxes each year, the premiums that you spend on your long-term care insurance plan count as a qualifying medical expense. So if that plus all your other medical expenses add up to whatever the requirement is, you could potentially qualify for a tax deduction. Same thing with business owners. There are ways to deduct your long-term care premiums as a qualified business expense, just like you do your medical benefits. So again, this is just one of the strategies that are out there. You have to do your research on all of them to really figure out what's going to be best for you. Or you want to take the easy button, just find someone that's well-versed in long-term care insurance plans, and they'll be able to walk you through the different coverage options and what they think is right for you. Now, one other bonus thing with this is long-term care insurance typically has linear requirements for medical purposes to qualify for. So someone would say with type 2 diabetes usually has a better chance of qualifying and getting a better rate with a long-term care insurance plan than they do going through a hybrid or even a life insurance route. If you want to learn more about the other strategies, check those videos out over here. I'll see you guys next week. Remember that your future depends on what you do today.